All right. Good evening, everybody. Let me just get this off. How are we? Hope everyone is well. Thanks for joining me this Sunday evening. I know there's a couple of you on here already. Food Dweller, welcome. Kiki, welcome. Claudio, welcome. Ian, thanks for being here. So before we get into the Q&A, it's just a couple of things actually from me. First, because I realize that I don't ask people to do these things enough. So I've made a note in my diary to make sure that I do this more. So a couple of asks actually from my side. So I launched a digital magazine in January. The second issue is going to be out in about 2.5 weeks. If you're not on the mailing list for that, it's completely free, by the way. We are going to be covering stock market, crypto, personal finance, and anything else that's interesting in the finance space. It's going to be easy to read, easy to understand, like news essentially, and it will help you on your journey. We have a column in there that will help you also improve your financial vocabulary. So we're going to be going through financial terminology, breaking it down in terms of what it basically needs. So it's a really good read. Second issue's out second week end in Feb, so about two and a bit weeks away. If you haven't subscribed already, you want to get on the subscription list, all you need to do is go over to conversationofmoney.com, and in the top banner, you can literally just leave your details there and you'll get a copy of the second issue that will be coming out shortly. I think was there one other one? I don't think there was. I might remember it a bit later on. But anyway, welcome. Thanks for being here on this Sunday. I did want to talk a little bit about inflation, because inflation numbers are at a 30-year high at the moment, 5.4%, which is absolutely huge. And just speaking to some people that I know, talking about how they've seen kind of like their disposable income get squeezed because gas prices, electric prices, just putting money, fuel into your car, all of those have increased in cost. Then alongside that, food is getting a little bit more expensive. And so I talk about this on the podcast tomorrow, but there seems to be a little bit of a perfect storm going on right now. And what I mean by that is we have a combination of things happening right now. And if you put them all into a cauldron, some people may say this is a disaster, it's the end of the world, but I don't think it necessarily is. I think there is a little bit of hope and things that we can do within our control within this conversation. So if I were to put all of these elements together, these elements will be soaring inflation, 30-year high. We haven't been in this territory since 1992 at 5.4%. We know that the price caps for the energy providers, British Gas, Electric, those kind of providers, the price cap is going to be coming off in April. So there is already a fear that those prices are going to go up, and that's going to push inflation to 7%. Now, back in October, we were talking about inflation being 5% by the time we got to April. We're way in advance of where that is right now. So soaring inflation, declining wages. Some people have had pay rises this year, or at least in the last 12 months, reported by the ONS to be about 3.8%. But when you compare that to inflation at 5.4, it's not really a pay rise. You haven't even caught up with or kept up with inflation. Then alongside that, our favorite topic, stock market, right? Feels as though we're getting close or in a market crash right now. So with that becomes risk and speculation with that. But also the fourth thing that brings up the rear in this conversation is the great resignation. People leaving jobs, looking to go into things that I guess that they want to pursue as part of their aspiration. So those four things kind of represent the perfect storm. And the big question that we're going to be seeing at the moment with inflation is that essentially the Bank of England are meeting on February the 3rd, and they are likely to increase interest rates again. What impact that's going to have on interest rates, nobody really knows. Hopefully it goes some way to actually combat this. And I want to talk about this specifically because when you talk about combating inflation, interest rates is one lever that the Bank of England can pull. Now, their roles are twofold. Number one, to control inflation, but number two, to ensure that there's always going to be financial stability. And they never want to do anything that potentially could impact or jeopardize financial stability. So the likelihood that they're going to increase interest rates by 1% is very, very, very infinitesimal, if that, because they don't want to introduce a shock to the system that could then burst the debt bubble, if you will. So we're in a bit of a quandary right now. If interest rates go up, that's good news for savers, I guess. And it's not really good news because the interest rate rise isn't really going to be reflected in your savings deposits, right? It's not necessarily good news if you have a mortgage. If you're on a standard variable rate, you probably want to think about getting fixed. And we did videos where we talked about the habito mortgage, 7 times salary, but also being able to fix in for a longer period of time if we know that interest rates are going to be increasing over the next year or two. So fixing may be a really good idea for some people if you're looking to try and control your financial situation right now and try and get to grips as to what's going on from a fiscal point of view from your personal finance. Now, with that out of the way, we know we're not going to get anything on the saving side. The only alternative that you have is investing, which is our topic here. This is the stuff that we like to talk about. And I've got so many questions already in there, which I'm going to come to in a moment. But let me just make this point. Investing. But look at the market. This was the second thing out of the perfect storm that I mentioned, right? It feels as though the market is taking a bit of a dive right now. And it feels as though all the news that's out there is telling us that it's going to get worse. These fears of inflation are not just here in the UK. Obviously, America is facing the same problems. COVID is still around. Yes, we've had, some of these COVID restrictions are going to be lifted next week and in coming weeks, but we still have that as an issue. So with investing being the go-to place, the question around risk, diversification, all of that becomes important. It's not just about buying the dip blindly, especially with the news that's coming out. And I said this in a group chat earlier because I had a meeting before this, and I want you to be careful of this. And this goes to stocks, crypto, NFTs, Forex, anything that you might be presented with. Just remember this, okay? In a gold rush, people don't make money by digging for the gold. They make money by selling the shovels for people to dig for the gold. And unfortunately, there are still a lot of opportunists at the moment selling people shovels to go dig for the gold. And all they're doing is they are selling this dream of you could have this, we did this. The NFT space is full of it right now. So just the cautionary tale, be a little bit careful. Yes, we know that there are pressures right now. Absolutely. Inflation's high. Your disposable income is getting squeezed. But there are certain things that we can do that are within our control. First and foremost, try and get a handle on your in and out. Money coming in, money going out. It means you got to get rid of a Spotify subscription for a momentary short period of time. Then absolutely do that. But you need to make sure disposable income is really, really cool. Hopefully you've got emergency funds. I talk about this all the time, right? If prices are going to go up, you might actually need to fall back on some cash reserves of some kind to ensure that you don't get sideswiped by increase in gas, electric, food, fuel, right? Having some cash set aside is really important. These are the things that we can control. When it comes to investing specifically, we can control the level of risk that we basically take with our investment portfolios, being prudent, being mindful, being watchful of what we basically do. Not going for something that is too high risk unless you absolutely want to and you're okay to accept those risks. Ralik, I know that you are just here right now. I just messaged you actually. I don't know whether you're back or not, mate. Let me know if you are. I would love to get your take on Bitcoin because Bitcoin has been a massive discussion right now. So ping me a message on Insta if you can. And if you are able to jump on, it would be great to have a conversation with you over this live as well. But anyway, I know that I've got a ton of questions in here right now. So let's get into the messages. I'm going to start from the top like I always do. So let's see what we've got here. Okay, you're back. Right, mate. Let me just see if I can actually get you a link. 1 second, bud. Right, I'm going to message you a link on IG right now. So join me when you can. Maybe give us maybe 10, 15 minutes if you can. That will be amazing. So let me just ping this to you right now. There you go, bud. So hopefully see you soon. All right, okay. So what we've got in terms of questions. By the way, guys, if you can smash the like button, that would be really, really helpful. We've got a good number of you on here already, but that will just help with the algorithm and making sure that other people actually get to see this after we are done with this live session. Let's have a look. Let's go all the way up here. Kiki's asking, any news about trading 212? I haven't got any news about trading 212, unfortunately. They're still not opening accounts. They're opening accounts in Europe, but not here in the UK still. So I don't know what's going on there. Some people are speculating it's something to do with Brexit and passporting, right? But I don't know. There isn't any news that I've essentially picked up for it. Let me just change the captions on this because I didn't like that overlay that we had there. Bear me 1 second before I get into the next one. Where is this? Have they moved it? There we go. Let's use that one, which is the best one. Okay, cool. Food dweller. I know you asked something here. Let's have a look. I want to know if someone transfers money, say £50,000 to your bank account as a gift, do you have to pay tax on it? Well, that depends. There is a rule around gifting, which is 7-year rule. So you shouldn't have to pay any tax on it, but potentially the person who gifted you the money would have to pay tax on it if anything happened to them. So, i.e., they die after 7 years. So there's the gifting rule there. You should be okay, but the person who gifted you the money would have to obviously make sure that they're obviously accounting for it because the 7 year rule will kick in. So essentially, if they die within 7 years, the tax that will be payable will be tapered from a rate essentially. So you shouldn't have to worry, but the person who gifted you will potentially have to worry about potential tax. Um, they've changed this. Oh no, this is the wrong one. I was on the wrong one. Sorry. Right, let's have a look. Okay, we done that one. Hey Luke, how you doing? Making tax simple. How you doing? Yes, listen, I'll tell you what. Let's just talk about this because yesterday was a good day. Like you asked me about United last week, and it was like bad news. Like it wasn't fun to watch. I didn't watch the match yesterday because I was in meetings pretty much all day yesterday. But actually, I did see the highlights and just that last minute goal. I don't know what confidence isn't the right word that it instills you with, but at least they're playing with a little bit of passion. And Cavani, by the way, the way he was celebrating was as though he actually scored the goal. That's what you need in a team like that. So yesterday was a very good day. Um, yeah, we needed that desperately. I actually was at Brentford midweek. Um, that was first half was a bit ropey, to be fair, but the second half display was very very good indeed. I mean the second goal was amazing. Like just Ronaldo that chest in, Alanga did so well. Rashford coming on and again scoring, brilliant. Rashford needs that to be fair, but yeah, it's a good day. It's a good day if you're a United supporter. There's a good feeling. How long it lasts for though is questionable. I guess we might we might play our next team and then just capitulate, and then everyone will be moaning again, and I'll be moaning again for sure. Abdul, hey Pete, hope you're well, my mate. Just wondering what your thoughts on this recent flash crash we had with cryptos. Thanks. You know what? Ralik will be the best person to actually talk about that because he's a popular investor on eToro and he actually has quite a bit in crypto and he actually follows crypto more closely than I do. He actually contributed to 5 cryptos to look out for in 2022 on issue 1 of my magazine. So he should be coming on shortly. He will be the one to basically give some commentary. So I will double back to this. My personal view on this is look, if you're holding, and trust me, I've got Bitcoin and I'm down. I'm down about 50% right now, actually, on my holdings altogether on Bitcoin, just Bitcoin alone. Um, I'm going to have to hold it. I'm going to have to hold it. We always knew that this was going to be something that was a possibility. You can't have something running at all-time highs and continue to have it run there, particularly with all the fears that we have at the moment out on the market. And just investor sentiment. Within Bitcoin, and Radek will probably talk about this as well, within crypto specifically, there was a lot of leverage. So I think that's had a little bit of an impact, but he'll be able to explain a little bit more in depth than I can. So we'll circle back around to this one, Abdul. Duncan, hey Pete, my portfolio has been hammered lately. Tesla, Fiverr, PSFE. I don't recall which one that is. Square Skids. I'm planning on holding some comforting words, please, mate. Listen, I know exactly how you feel. I'm looking at my individual stock portfolio as well, and I feel exactly the same as you do. It doesn't matter how long you've been investing for. When you look at your investment portfolio and it's down, it hurts. It really, really does hurt. And the immediate human response is cash this in, protect myself a little bit more. We all have that. It's innate in us, right? We want to protect ourselves from further harm. And you start thinking about, oh my God, if I lose all of this money, what impact is going to have on you. This is why some of the fundamental principles that I preach and I talk about on the channel are so important. Emergency funds. If you have an emergency fund and you have some money set aside and it's not all in one place, hopefully the whatever loss that you're sitting on right now doesn't make any material difference to you. But I know exactly what you're thinking, how you're feeling. I kind of mentioned in the video on Tuesday that and I probably will still do this because my Tesla is up quite a bit, and I'm actually thinking of taking profits on that altogether. Now I'm with Hargreaves Lansdown. It's slightly harder to do with Hargreaves Lansdown, so I'm a little bit of a bind at the moment in terms of how much you're going to go do that. But I am seriously thinking about taking profits when it comes to my Tesla holdings because I am up quite a bit, and I think ultimately, mate, just you've got to. Hopefully, you've accounted and you've expected this. We often talk about market crashes and what that feels like as an investor, especially if this is your first time round. It's horrible to deal with, but the strength and the experience that you're going to gain from this, because markets are cyclical, like it swings and roundabouts, mate. This will always come around. We're going to come out of this, go on a bit of a run, and then in the near future, we're going to be right back at this space right here. The good thing here and the opportunity lies in the fact that if there is going to be a true market correction, there is opportunity in buying a lot of these companies at a discounted rate. However, you still need to know what you're doing. So, for example, for me, I've got a stack of cash set aside right now, and I'm just kind of waiting until I feel okay. I think I'm confident enough to go in right now. Although it's impossible to time the market. I could go and put more money into right now today, and then tomorrow there's a further 5%, 8% drop. I don't have any control over that. But if I feel as though I'm investing into something that over the long term is going to recover, buying at a low point or lower than it has been, maybe not the lowest point, but lower than it has been, gives you the ability to actually benefit on the rise back up. I promise you, that's what Warren Buffett, that's what Ray Dalio, that's what all of the big investors are going to be looking at. They're going to be looking at this as an opportunity to make a load of money. So it's not the end of the world. Yes, you're sitting on losses right now, but hopefully, if you're the kind of person who's investing on a monthly basis, you're able to kind of like at least strategize what your next moves are going to be. And obviously, this is not advice. This is just opinion on my part. But yeah, it is hard and it is difficult to look at a loss, but hopefully you've accounted for it. The markets will come back. It's just a question of when. We don't know when. As long as we sit tight, we should be okay. Was right. Okay. Hey Pete, do you still use eToro as your main platform, like you mentioned from a previous video? Trading 212 still not opening accounts, and free trade seems to have grown since you reviewed it. Yeah, so I'm still using Trading 212. So Trading 212, yeah, I've still got stuff in there. I've got a bit of Bitcoin in there. I've got some Tesla in there. I've got some other cryptos in there as well. Like I said, though, it's not my main, I guess. It's one of my mains, but it's not my main because I obviously hold a lot of index funds in ETFs, and I hold those with Legal in General. and the like, essentially. So, and to be honest, I've not even reviewed legal in general. They're one of these legacy ones where obviously got money with Vanguard as well. But for individual stocks, cryptos, those kind of things, I am using eToro and what I have been using Trading 212. And to be honest, Free Trade, I've reviewed them. My experience of the interface is a little bit clunky, but I hear that their customer service is awesome. And they've obviously been on a live show with me here. They're a really, really good team of guys and stuff. But yeah, Free Trade are doing really, really well. I think off the back of the fact that Trading 212 aren't opening accounts still, I think they've benefited from that as well. Claudio, hey P, what would be your top five stocks to choose from in the current climate in terms of the current dropped share price and business analysis? I haven't looked at any stocks for an individual purchase at this point in time. If I'm honest, if I'm going to go into the market and I've got money set aside, I'm not going to be buying individual stocks. I'm going to be buying a basket. I'm going to be buying an ETF to get me that saturation across sectors. I've already got quite a bit in individual companies, so I'm not researching individual companies at this point in time. A lot of the metaverse kind of like stocks that are in the tech, either software or hardware, I've already got within my portfolio. That seems to be the buzz of where the future indication would be, and that's where I have a little bit of interest or quite a bit of interest. Obviously, EVs, but I haven't researched any specific new companies for me to be able to reel off five specific stocks that I have on my watch list. And given where we are right now and the propensity for people to kind of just look for, right, this stock has been talked about a lot, I wouldn't want to reel off five stocks anyway, because, and this is, I think I've tried to be very, very careful of that on this channel, saying these are my top five stocks moving forward. Because, if you go back to last year and you think back to people like Nicola, and you had a ton of videos on YouTube talking about Nicola, top stock for 2021 or 2020 or whenever it was. Look at what happened with that stock. The CEO is now being indicted for fraud because guess what? The entire thing was an absolute lie. So I'm always very careful about that. I think if you're going to be looking at five stocks, I guess the starting point for you, Claudio, should be if you have any interest in a particular sector or industry where you have direct relevant experience. Start with something maybe, and start to research the companies from there. Because if you speak to anybody who's in this space, everyone's going to have a different top five. And if those top five companies don't necessarily speak to you and you're going on the words of others, that can be a little bit dangerous. You have to be able to understand the research and all that kind of stuff, and look at things that like have first-hand experience in. It doesn't matter what sector you're in. It could be fitness and health. There'll be companies in the fitness and health department that are leading the way, that may be at the forefront of your mind in that sector because they're doing something really, really good. Those are often companies to start with. But yeah, I don't want to reel off top five stocks because number one, I don't have any. Because when I do invest, I'm going to be buying an ETF or an index fund of some kind and maintaining my individual portfolio. If not buying it more into those, I'm not going to be adding any more companies specifically into that basket. Liam, opinion on a monthly cost average index funds only available. So hang on a second. Opinion on monthly cost average index fund only portfolio. Okay, so this is your split, I'm guessing, right? So 45% VUSA, FTSE 250, developed Europe, FTSE 100, NASDAQ, emerging markets, and all 15 to 5%. Mate, I can't comment on that because I don't even know what your risk profile is. I mean, the split looks okay, but I don't know anything about you. I don't know what your goals are. I don't know whether you're looking to invest for 3 years, 5 years, 10 years. I don't know any of that. I mean, the question is, do you feel comfortable with that level of exposure? If you think you're maybe, I don't know, too overexposed or underexposed in one of those areas, then that will be your final decision to make. I can't sit here knowing nothing about you and say, well, actually, mate, you know that VUSA, you should up that by 15% and get 60% exposure into the S&P 500. That would be wrong of me because I don't know anything about you. I don't know what your goals are. I don't know why you're investing. I don't know where you're coming from. I don't know anything about you. Are you comfortable with that level of exposure? Are you okay with that asset allocation? That is the question. If you're in and ahhing, that probably tells you that you're not quite right. The challenge will then be, okay, so how do you get to a space where you feel comfortable with what you're doing? Because ultimately, mate, this is your money. It's essentially your money. You're taking the risk. So you need to make sure that you are comfortable. One thing I would say there though is right. So the VUSA is the S&P 500 clearly. So that's United States. You've got FTSE 250 in there. So that's probably UK. You've got FTSE 100. You've got developed Europe. So you've got a European exposure. The Nasdaq as well. You've got emerging markets. So it feels like you've got a bit of a global theme going there, which is good because you're going to have a little bit of diversification across the different geographical regions. And then within that, because of what you've chosen, you're going to have sector diversification as well. But are you happy with it? It's your money, it's your investment proposition. If I knew more about you and I knew what your risk profile is and how long you're looking to invest for and your goals, I could probably say, okay, maybe your risk, you might be taking a little bit more risk, but I don't know anything about you in order to give that. But you need to try and get to a position where you feel comfortable with it. If you're and ahhing, that is probably a good indication to maybe shift things a little bit, and maybe get into something where you feel like you've got the right level of exposure. One sec, guys. Link isn't working. Right, 1 second. Um, Ralik's trying to get on. He's just saying that the link that I've sent him isn't working. So I'm just going to ping it over to him again. Bear me 1 second. Let me just get rid of this one actually. 1 second. Why would that not be working? I'll keep an eye on the messages. Let's just crack on through here. Okay, Pete. Looking to start my portfolio next week. What would you recommend you start with, considering the current inflation situation and stocks dropping? First and foremost, can't join the room. Um, First and foremost, I would probably be asking. 1 second, guys. Bear me 1 second. Sorry. Apologies, guys. I'm trying to get Ralik on, but he's having a few issues trying to jump on with the link here because I do want to talk a little bit about Bitcoin, what's going on in the crypto space, and he's best positioned to do that. So let's just get back to the question that I was answering before, and I'll just hold tight and see if he is able to get on. We're just messaging back and forth here. So um, where was I? Okay, so it was this one. Okay, looking to start your portfolio next week. So the first thing you need to do is just make sure that whatever it is that you're putting in, you're comfortable with the levels that you're putting in first and foremost. Do not overextend yourself. If you're putting in a lump sum, and let's just say it's £1,000, are you comfortable with the fact that you could put £1,000 in tomorrow, and then we might still see a further dip in the market? So your £1,000 could become 950, could be 900 quid, could be 800 quid. You could at the same time put the money in and it jumps straight away. We go straight on a bit of a growth spurt. We don't know what's going to happen. So first and foremost, are you happy with the level of capital that you're putting in? The second thing is, and I'm going to refer to my points from Tuesday's video. Do you have a clear goal or reason why you're investing? I used in that video buying a house as an example. So if you're buying a house, are you clear on the detail, the granularity of what you're planning to do? Are you looking to buy a house in 3 years, 4 years, 5 years? What does that actually look like? You need to be clear on that, because if you're going to be looking to invest for 3 years, 4 years, that's very, very different to investing in 5 years. So you're looking to purchase your house in 5 years' time. So make sure that you are able to articulate or at least note down what your goal is and why you're looking to invest. Really, really important. From that point onwards, you need to ask yourself and say, look, if I'm looking to invest over this period of time, how much of that £1,000 am I happy to see drop without it actually impacting me or making me feel as though I've basically done something wrong? Really, really hard question to answer sometimes, but you have to be realistic. What I find most people do a lot of the time is they will say, I'm completely comfortable with losing 10%. If it goes down 10%, I won't be bothered. But the minute it goes down by that 10%, they are bothered, because you work hard for your money. There is always going to be an emotional attachment to your money. So seeing a 10% loss will hit you differently when it actually happens. It's the whole reason why people use virtual trading accounts, practice accounts, right? When trading, when learning to trade, feel very, very confident because they took their £50,000 account to 55,000 or 60,000. But when they get to the real thing, it's very, very different. The psychology is different. So once you're in the markets, psychology is different. So be very, very clear on your goal. Let your goal inform your plan. If you're investing for 5 years, 3 years, really, really important to understand the level of risk you should be taking. I will kind of illustrate this in a moment for you, just so you can see the visual for it, okay? But be comfortable with the original amount. Make sure you know your goal. Make sure you have a plan. And if you're happy to put it in there, just know it is going to go up and down. You can't do anything about it. It's completely outside of your control. And like I would normally generally say to people is, you just strap in for the ride and enjoy the roller coaster. That's what it needs to be. So on the whole timeline thing, here he is. Let me just finish answering this question, and then we can jump in with Ralik. Um, Let me just illustrate this very quickly for you. Let me just move this. So what I'm talking about here, when I talk about, understand in your plan how long you've got. So let's just say your house purchase, let's just say I'm going to use 5 years as the example here, right? Let's just say your house purchase is here, okay? And this is 3 years. I know that's not perfect from a drawing point of view. Between here and here is a very short period of time. You have 3 years. You've got the year you invest. So year 1, year 2, year 3. This is when you need your money out. If this is your scenario, you need to be taking the least amount of risk as possible. A short period of time means less risk. If you're going for 5 years, it's slightly different. It doesn't mean that you can go high risk. It just means that you can just afford to take a little more, but not much more risk than you're taking right here. So in a tangible sense, from maybe if you're picking an index fund with, I don't know, Vanguard that might have an asset allocation of 40% versus 60%, you're probably still going to be at the relatively low end here, really, to be honest. I mean, if I was advising you as a financial advisor, and you're looking at a 3 year term. Number one, I'd be probably encouraging you either not to invest because it's not long enough, and if you do, using the life strategy funds as an example, you'll probably be looking at the 20% equity, because if anything happens in year 1 or 2 and you need your money out here, you're done. You're not buying your house in that period of time. So it's all about managing your downside and thinking to yourself, if you're going to put money in and you're looking to buy a house in 3 years' time, what happens if this is a minus year? This is negative, right? -5. What happens if this is, a -3 and you need your money out here? Or you have a really positive year here, and let's just say this is a +5, but actually this year here is a -8. What do you do? It's all about managing your downside risk. So even if you're here, I mean, you probably wouldn't sit within the 20% likely, but still, you need to bear in mind that you've only got an extra 2 years. If you've got a little bit more time, but that doesn't mean you can go extremely high risk. I'm just explaining theory here for you so you can understand it from a visual point of view, but your risk management will be really, really important. But first and foremost, just make sure that you're happy with the amount that you're putting in. You've got a goal, you've got a plan, you kind of understand what you're doing, and you accept that your capital is at risk, and ultimately we can't control what the markets are going to do. So I hope that basically helps. Right, before we circle on to Abdul's question, let me just bring in Ralik, because my guy, you've been a
Hello,
while.
hello.
Finally here, mate. I don't know what happened with the link.
Yeah,
I might.
I think it was an issue. I think it was an issue with Chrome. So I opened it up in Firefox and now it's working. So
Ah,
yeah,
good, mate. It's good to have you here. How was your
but
Christmas and New Year's?
it was all right. Could have been better. Obviously, it's like the moment I took some time off, decided to have a 2 week vacation, and the markets take a massive dive, and I
Uh huh.
am no longer on vacation all of a sudden. So
Uh huh.
but that's the way it goes when you trade in markets that trade 24/7, and you don't really ever get a break. So if
Yeah.
Bitcoin doesn't want to take a vacation, then neither do I guess. But otherwise, how was your time off?
It was good, man. I had some time. I had 2.5 weeks where I did pretty much no work. The podcast was pre-recorded. I didn't do any videos here on YouTube, which was unlike me. But it was important to take time out because, like last year, I was flat out the entire year, no holiday. So I needed some downtime more than anything else. But like you say, get back and it's like, what's going on? It's gone nuts.
Exactly.
So how have you got on with, because obviously you're a popular trader on eToro. So
Yeah.
how are you handling it at the moment? Have you got people who are copy trading you, asking you questions? What's going on?
Yeah, the general sense that I'm getting sort of across the social side of investing right now is just absolute panic,
Hmm.
and it's kind of to be expected. Most people have joined these platforms for the first time in, I'd say, the past year or two, and they haven't ever really experienced a massive downturn in the markets,
Yep.
and not just a downturn in the stock markets, but also a downturn in crypto. And sort of across the board. It's not just one single market. It's not like only the US markets are struggling right now
Mhm.
or
It's
only crypto
everything.
is struggling. Everything is
Mhm.
just is plummeting. And yeah, I mean that's why I've sort of got a I've got a something that I try to hold myself to, and that is communicate, communicate, communicate. So it's whenever you have situations like this, the first thing I do is like, okay, well, whereas I'd normally stream, say, once or twice a week, now I'm streaming 3 to 4 times a week. Now I'm writing posts every single day or twice a day. So it's just about putting everything into perspective for people, making sure that they understand exactly what is actually going on,
Mhm.
and to ensure that they have the information necessary so that they don't make stupid mistakes. Because I've seen a lot of silly mistakes being made, not only by copy traders, but as well as other popular investors.
Mhm.
Just that desire to have like green months and chase losses. It's
Mhm.
one of the biggest mistakes you can make, because that's what sort of leads you to leverage and wanting to over
Yeah,
leverage specific markets,
yeah.
and
And
then you
this is
just get
what we
wiped out.
Yeah, and this is where we talk about human psychology, and it's almost that gambler's fallacy. So you see a lot on paper, you feel the urge to want to try and recover it, particularly in a trading position where you can obviously use leverage, and that in itself is a dangerous space to be because rational thought goes out the window, and the obsession becomes it's red. I need to get back into the green. So with Bitcoin specifically, because
Yeah.
I was following it closely, certainly over the last couple of weeks. People were saying if it goes below 40,000, it's going to be the end. We can see it bottom down to $20,000 a coin and stuff like that. So there's been a lot of hysteria and a lot of hyperbole out there in terms of what could potentially happen. What are you seeing on the Bitcoin front and crypto front specifically at the moment?
So funny enough with crypto right now is I'm probably the most calm I think I've been in probably I'd say the last year or two, just in terms of the current situation. Because for once, everything that's happening to crypto isn't really crypto's fault. It's more
Hmm.
of the influence from the massive inflation problem that we're seeing across the board. And while yes, most people would argue, well, isn't crypto meant to be this hedge against inflation? Isn't it meant to move in the opposite direction and be sort of one of those safe havens in that sense? And while ultimately I think one day, yes, we're not there yet. It is a very new industry. When people start to panic, they start to panic across the board. So from what I'm seeing in terms of the fundamentals of crypto, nothing's really changed. Everything's still looking good from a fundamental perspective, where institutional money is continuing to flow in. We see stories every single day in the news of specific companies getting more involved in the crypto space, particular countries wanting to experiment with crypto in terms of legal tender and so forth. I mean, we had El Salvador pick up even more Bitcoin, but I mean, I think Bukele at this point I think he's just going a bit crazy and just wanting to buy every single dip.
Yeah,
But then there, but then you also have other country like other third or developing countries playing with the idea of bringing on Bitcoin as legal tender. So this narrative of Bitcoin's dead or crypto is dead, like I see this every single time there's a drop, and right now there's nothing to suggest that that is the case by any means. That's not to say that yes, we should just go full force in and completely degen into crypto right now. Like I would never recommend that. And it's more about the overall impact that the global conditions are having on crypto right now. So I'm relatively calm with regards to the current situation. Yes, they said if it breaks 40K, we're going to see 30K. And then they're going to say if it breaks 30K, we're going to see 20K. But I mean, people continue to say that even when we do reach the bottom, is this the bottom? I don't know. Anybody who says this is the bottom is lying, because the impact or the influence on crypto right now is from the US, it's from the UK, it's from the EU as a whole. Everyone trying to fight this inflation problem, and with all the interest rate hikes, the tapering, and so forth, it's causing issues from an outside source onto all markets. So
yeah,
I'm not going to try call the bottom. I haven't tried to call the bottom yet, and like I was streaming yesterday, and sort of like a little joke we had with everyone involved in the stream was we were playing a little game of can you like pin the tail on the bottom, like who thinks this is the current bottom and who thinks it's going to go lower, and
hmm,
it's more just trying to make light of a tough situation.
yeah.
But yeah, I would like for this to be the bottom. I'd like for us to head back up to above 40K, looking to push back to 50K. But the truth is, I don't know. Nobody knows, because this is a major catalyst coming from outside of the crypto space as a whole.
How much has the leveraged positions impacted this? Have you seen people just dump it and just be like, you know what, let's just get out? How much of an impact has that had?
So funny enough with the leverage is that's something I've been following very, very closely over the past few months, especially with the initial flash crash that we saw. And most people thought that this was going to be what we needed to shake out all that leverage in the market. Leverage is
It's
at an
still being
all-time high
held.
still.
Is it?
Yeah,
Wow. Wow. Really?
yeah. Yep, leverage is still at pretty much an all-time high. It had a little bit of a drop yesterday, but if you look at the sheer volume in the actual drop of Bitcoin, as well as the actual trading volume that we saw, there was only around about $1 billion of leverage liquidated, and that's not that much if you sort of compare it to previous flash crashes.
Hmm.
I mean, a few months ago, during like a 10% flash crash, I think we had nearly $3 billion of leverage liquidated in a 48-hour time period.
Wow.
And now we're kind of in a situation where leverage is still way, way too high. But that sort of brings it onto a different thought. Well, if we're having these massive drops and
Why are they
these
holding?
leverage liquidations aren't taking place, well, why is that the case? And
Hmm.
my theory with regards to this, it's one of two things. One, I think people are getting a little bit more smart about how they approach leverage instead of, say, taking 5 to, or like 10 to 20 to 50x leverage, like they maybe previously were doing. Instead, they're maybe looking to do 2 to 3x leverage, like
Hmm.
toning it down a bit on the leverage side. So if you do have a 10% drop, it's not going to liquidate them completely. So that's a theory on the one side of things. The other theory is there could also be quite a lot of leverage shorting the market right now. And so when the market crashes, of course, you're not going to have the liquidations because
Hmm.
certain people are making money. And
Yeah.
that also opens up a potential for a short squeeze at some point.
Hmm.
So these are all the things I'm seeing. And it was definitely interesting seeing how little leverage was liquidated with the massive drops that we have seen, because previously that would cause absolute panic. That would cause these massive price movements of like 15 to 20% in a single day.
Hmm.
And while, yes, we're still feeling the hurt and the pain, we're not seeing that on that front. I think the main reason for these massive drops in crypto, it looks like it's coming from mostly retail traders, like panicking and just being like, I'm going to cut my losses, tap out for now. Either I'm not going to get involved in crypto again, or I'll come back at a later stage when things are more stable
Yeah.
and try again at a later stage. And we see that with the fear and greed index, where it's at one of
Yeah.
its like all-time lows right now, sitting at 11,
Yeah.
which is extreme fear of one of the biggest kinds, as well as taking a look at the RSI. I mean, that is oversold for literally the first time since May last year.
Wow.
And it is more oversold than May last year. This level of oversold on RSI, we haven't really seen that since around about the beginning of 2020. And every single time that RSI has hit these levels of being oversold, it's normally preceded by a massive rally in the price in the coming weeks. Not obviously not saying that's going to happen because past events don't determine
Hmm.
future events, but with the health of crypto right now, and with the main reason being sort of outside influences pushing the price down, it does look like a decent time to for those who either were not involved in crypto, who are looking for an opportunity to get into crypto, to maybe start considering, okay, are these decent entry prices?
Hmm.
And if so, what is my entry strategy? Because it's not just about sort of like throwing 80% of your equity into some of the altcoins and like Doge and
Yeah.
SHIB and being like, I'm going to ride this thing to the moon.
Yeah.
At least from my perspective, it's more about playing it a little bit more safe in, and if like obviously not financial advice and all that. But my strategy right now is not picking up all of the alts like Polkadot, Atom, Luna, and so forth. It's more looking at investing in the more stable cryptos and waiting for it to climb until a more stable position so that we can ride that alt season once again. And that's why a lot of the time when I get asked, like, should I buy Bitcoin right now or should I buy Polkadot right now? My approach personally is maybe an allocation of say like 70% Bitcoin, 30% Ethereum, And that's quite a lot of Ethereum in terms of what we're going on right now. It
Mm.
even goes far as to say like 80% Bitcoin, 20% Ethereum,
They're
and
two
then
of the
just
largest
taking
ones,
it
though, aren't they?
easy.
They're two of the largest ones.
Exactly.
So you're going to get a little bit of
Exactly.
stability within the holdings, and it won't be as susceptible to massive moves like some of the alt or the meme coins that you're going to have also listed as well. It's interesting what you talked about there in terms of the retail investors likely having a huge impact on this, because I spoke at the beginning of this live about this perfect storm and this combination of all of these things that are happening right now. I mean, in there, I didn't even throw in property price increases and all that stuff, because that's kind of more longer term than what we're looking at right now within this very specific period of time. But you cannot underestimate the impact of inflation and what that does to how people feel in terms of consumer confidence and investor confidence. I was reading something earlier today, and when they surveyed a group of people, I think they surveyed 2 to 3 thousand people, their consumer confidence and investor confidence was at an all-time low in comparison to the
Mm.
last 3 to 4 years. And the impact of that is that essentially, if you do have money invested in the stock market, you are likely, if you are maybe overexposed in the market, looking at it thinking, I want my money out. And you're going to try and hold some money back, probably not making large purchases, which means that you're going to have the impact of no spending within the economy to try and get that going as well, which obviously has impacts on GDP and all that kind of stuff. But you're likely going to be a little bit more prudent and tighten your belt when it comes to your personal finances, because you're being squeezed on, electric, gas, fuel, food costs. So you're going to do
Yep.
everything that you can to try and make everything more sustainable and more comfortable for you. And unfortunately, that comes at the cost of extra spending. And in most cases, a lot of the time, investing in the stock market as well, because people deem it as though I need that cash, so I'm going to take it out.
Yeah, there's definitely a lot less disposable income at the moment, and that leads directly impacts the amount of investment that can take place. So, not really a surprise there. Like I think we're all feeling it right now. Anybody who's received like a gas bill in the past few months, it's like wow compared to last year.
I've not
So
received
you
my
got
one just yet, and I'm dreading it arriving. I'm like, I need to speak to them, to be fair. And the unfortunate thing is, here in the UK, we did have a load of like competitor energy suppliers. I left one of the big ones to go to one of the small ones. One of the small ones went bust, so I'm now back with the guy that I left in the first place. And in April, the price caps are going to be lifted, so they can move the
Mm.
energy prices up to, I guess, whatever they feel is profitable or fair for them. So we're going to see
Yeah.
even more prices increase, and they don't have any competition, which is not good for the consumer essentially. But it's an interesting time. You contributed to issue one of the convo. Thank you for that.
Yes.
Based on everything that's happened so far, do you still hold on the cryptos that you're looking at for this year, or
Uh,
has your thinking changed slightly? Has it shifted slightly?
So the cryptos that I gave, I did it for a reason. Like I wanted to leave it as sort of a top five and not go too out of control.
Hmm.
Um, when I was chatting to my chat on Twitch about the newsletter after it was released, and I sort of took them through it, highlighted some of those. I got a lot of questions like why not Matic, why not Basic Attention Token, and so forth. And
Hmm.
it's more about I want to try keep it as concise as possible and not go sort of too crazy. There are a lot of great projects out there at the moment, but in terms of the picks that I have, it's more for the most upside potential while also being a solid, healthy project that is not likely to have some fundamental flaw that's going to
Hmm.
present quite a lot of downside risk. It's not to say that maybe one of them have an event like that. Obviously, that's why you diversify. It's why you don't put all your eggs into a single basket. But yeah, the top five picks that I have in there, I still think they're great. The only thing I would maybe change with regards to that is sort of what I mentioned earlier in the conversation, which was around right here and now. I wouldn't be going into the alts. I'd be focusing on Bitcoin and Ethereum.
Hmm. And what about? I have to ask you about this NFT space. What's going
Yeah.
on? Like, there are so many projects. It is unreal. I've so over Christmas and New Year's, I was away obviously, and I thought, right, let me just have a little look at a few projects. And I'll tell you what, the Discord groups are just bamboozling. Like,
Yeah.
who are the legit admins? Which of the people in here that pretend to be admins are actually bots? And I mean, one of them at the moment, they've had issues, so many issues with scam bots putting in scam links. And I think there are something like 50, 60,000 people in this thing right now. There was one day before yesterday, and the admins had to come out and say, do not buy, do not go to that link. And people had already done it. It was like it was an
Yeah.
hour too late. There is so much going on in the NFT space right now. What's your take?
So the biggest thing with NFTs right now is obviously that is the major hype. It's NFTs and metaverse. It's like those are the two major words that gets everyone's attention. And truth is, and I mention it in that piece that I wrote for your newsletter too. It's most NFT projects are likely going to go to zero at some point. You cannot have sort of every single project being like the Mona Lisa. It's not going to happen. To me personally, the fact that like even something like a Bored Ape has the valuation it does is ridiculous.
Hmm.
I don't think. I personally don't think the prices should be anywhere near where they are. And if they end up staying at these levels, it'll only be because it was sort of one of the first to do it.
Hmm.
Like 20 years from now, and we look back, that maybe it'll hold like that level of value. But when you've got these like penguins, this and these like mongoose, that it's insane. As for a lot of these Discord groups, every now and again I'll pop into them more out of curiosity to just see sort of how they're trying to shill essentially a scam, because most of them
Yeah,
are.
yeah,
And it is insane the level of loyal followers that they have also pushing this.
yeah,
It's literally a Ponzi structure where you get ranks in the Discord based on you sharing the Discord link to others and how many clicks you get on your link. It's
yeah,
literally a pyramid scheme.
yeah.
So while yes, NFTs does have a lot of potential for future growth and importance within the space, I don't think that importance is going to be what everyone thinks it is right now. I mean, we right now also we see there's a recent article that came out saying that Facebook and Instagram are going to be allowing for the creation and distribution of NFTs through the platforms. Obviously, you've got platforms like Twitter, which
Hmm.
are enabling NFTs as your profile picture, and you can verify that you are the owner of that NFT. Google's also entering the game with crypto payments and storage and so forth. So there's a lot happening right now, and it's kind of reminding me a little bit of the dot-com bubble, where sort of any company, no matter who you were, would put .com at the end of your company name, and then
Hmm.
all of a sudden your share price goes up by 10 to 20x. That's
Hmm.
kind of like how the feeling I'm getting with regards to the NFT space right now. As long as you're aboard this or an ape that, then it's valued at these absolutely insane valuations.
Yeah, I'm so glad that you said that because my observation of being in these Discord groups is they are all strategically trying to push up the floor price. And I actually tuned into one of their meetings the other day as part of the Discord group. First, it was to combat another scam that had happened, and me being skeptical, I'm like, hang on a second, you've got 40 to 60,000 people in here captive who are they are hanging on your every freaking
Mm,
word. But still, even after you minted the first lot, which didn't go down too well, that people were saying was still a scam, you've had two other scams inside the Discord group. So how does that continue to happen? And me being skeptical, I'm like, is it you just pushing out the scams, raking more
mm,
money in from the captive audience that you have? And they were constantly talking about buy more. The floor price is increasing. We're one of the top crypto project, the NFT projects out there. If you go on OpenSea, they're not in the top 10.
mm.
And it's like,
Yeah, of course
are
not.
people actually looking at this? Are people looking at this, or are they just listening to what these guys are saying, which could be just bluster. You don't know who Jeff is. Who's
Mm.
Jeff? You don't know if he's a dude in London or a dude in Bangkok or God knows where. It's really really interesting at the moment seeing all of the stuff that's going on. There's a lot of noise, a lot of hyperbole. Every other day, I'm seeing this project. This person made 23 million in 10 minutes, and it's an NFT project. It's like it's what I said at the beginning of this show. Like the best way to make money in a gold rush is to sell the shovels for people to go
Yeah.
digging for that gold, and that's essentially what these guys are doing. They are selling shovels hand over fist.
Yeah, I completely agree with you. It's just, it's not sustainable. We saw it with, I mean, even if we want to use sort of a crypto example and we look back to 2017, the whole ICO fiasco,
Hmm.
where everyone was just creating a cryptocurrency for everything. I mean, one of the most common examples used is like, I think it was like Dent coin or something. It was a coin for dentists. And this thing shot through the roof. It had an insane valuation, and then it just ended up completely crashing to the floor, and it's never recovered. Um, so that's kind of how I see it playing out right now. Personally, I stay very far away from NFTs. Um, I experimented with them in the beginning, sort of minting some of my own, um, just like a personal project. Like, didn't sell any, but it was more just trying to see how they work and how it functions in the entire ecosystem. As well as I tried out that whole Axie Infinity thing. Personally, I think that's another. I've got a lot of skepticism regarding it, because as soon as you remove the fun from a game, then why is anybody playing?
Hmm.
And right now, then pretty much the entire player base is only involved for the entire purpose of making money.
Hmm.
And that's dangerous, because as soon as that side of it dries up, you lose your entire community and you lose that foundation that's so important. So there are one or two other NFT projects I've got an eye on at the moment. Not so much for actually like investing, more from a utility perspective. Um, like I'll use one example. The one's called well, I don't want to accidentally shill something that turns out to be like a
Yeah.
disaster. So
Okay.
I'm
Cool.
not gonna
Stay safe.
I'm not gonna
Stay
I'm
safe.
not gonna say the name, but basically what it revolves around is essentially you get a companion, and it's an NFT. So upon the creation of your account, it mints the NFT for you, and then it's to encourage fitness. So the more
Okay.
you work out, the more you're active, then your like companion like grows, gets experience and so forth. And then there's like a PvP thing where you can battle other people and so forth. But I'm not even interested in that for that perspective. I'm more interested in it because I know I don't have the motivation to go to the gym, but if I've got some virtual character that I need to get experience points, you bet your ass
Yeah.
I'm
Yeah.
showing
Yeah.
up to the gym
Yeah. Yeah.
to improve my my little companion on my app. So
Yeah.
that's more of where my interest lies there. It's not at all from a like a monetary perspective, and I think that's the important side of NFTs. It's the utility. It's not the gold rush. It's not to try and hit gold with that shovel that you've literally just spent hundreds of thousands of dollars on,
Hmm.
and you don't really know what you're invested in.
Yeah. I mean, I bought my first NFT in October, and it was a Matrix NFT purely because I love the Matrix. Like, I remember the
Yeah.
first film coming out, and I was like, wow. Then obviously the trilogy was great for me. And the minute they were like, oh, we're minting NFT, I was like, dude, I've bought them because it's a multi-year project. We're going to play some games. You can red pill, blue pill. Your avatar changes, like, appearance. You get to compete to be the one. It's a little bit of fun. And I'm a bit of a
Yeah.
sci-fi Marvel kind of geek in that way. So I'm like, hey, happy days. I didn't buy it to make money from it. And I think that's really, really important for people to kind of understand. I mean, it doesn't, it isn't helped when you have the likes of Logan Paul talking about, I bought this NFT for blah, blah, blah. I just sold it for blah. If you're looking at NFTs at that range where you're talking 500,000, 700,000, the pool of people who can afford to buy that is so small. And even if you just look at simple economics, how can you, if you have X amount and a few number of people who could buy something, sustain the price? It's almost virtually impossible. So the NFT space is very, 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 very interesting. I'm following a few at the minute. They launched one for the Australian Open. Just looking at that, that was really, really interesting what they've actually done. But it feeds in data from the matches, and you get match points.
Mm.
And if your plot of the law of the tennis court actually is one that results in a match point win, you actually get the data uploaded to the NFT, and you get the actual match ball sent to you. It's really, really cool. It's very, very cool. But that wasn't launched based on any hype. There wasn't any massive push with Floyd Mayweather or some celebrity of
Mm.
some kind. It's just there as something to have. But yeah, NFTs are very, very interesting at the moment. But cool. Um, we need to do a proper live where we actually talk a little bit more about the crypto space, because I think that will be really an interesting kind of thing to track in the coming weeks, depending on what goes on. I think the markets at the moment are in a little bit. I was looking at invest.com today, and everything is just in the. It feels like it's in the toilet,
Yeah.
and there will be a lot of people out there who are worried because, like you said, there'll be a lot of people who've just started to invest over the last 12 to 24 months. They've never been here before, and it's very, very easy to panic, start chasing losses, having not really had any kind of like pre-thought as to what you would do if this were to happen. And that's one of the key parts of the strategy. Be prepared for this kind of stuff and think about what the implication of this might actually be.
Exactly. Exactly. I completely agree with you there.
Cool. Cheers, man. So I think I'm going to try and take maybe a few more questions on here. There are so many. Sorry, guys. Um, yeah, there's a ton. Um, let me see. Are there any crypto ones that you can see, Ralik, that, as you're in here, that we could probably
Um,
maybe try and knock off?
I see there's one regarding minimum deposits on eToro.
I think that was reduced, right? They reduced it to like
Yeah.
50 quid or something like that. A
Yeah,
while back. I don't
Linda,
know
it
if it's
should
still
be
the
a lot
same.
less. It
Yeah,
should be a lot less. I believe they reduced it to something like $100 or $200. So it should be like a lot easier. Or it might even be something as low as $50 right now.
I think it was 50. The last time I saw it, I
Yeah,
think it was 50 or so, but I don't know whether it's still ongoing or not. But yeah, I'm trying to literally just open something now to see if I can actually just find out. But I do know that it was reduced significantly to a much, much lower amount. So I think 50 rings a bell for some reason. I'm just scanning to see if there's anything crypto related here
doesn't
that
look
we
like
can
it.
just tackle. I don't think there are. But guys, I know we're an hour 10 on. Radek, thanks for joining me. Maybe I might do. I'm
Thanks for
conscious
having
that
me
I've not
on.
answered that many questions, so I might give it another. I'll give it another 20 minutes answering, trying to get through some questions. But mate, let's talk offline. Um,
Definitely.
we can go from there, mate. Thank you, mate.
Awesome. Thanks for having me on. Bye,
Cheers, bud.
guys.
All right, okay, cool. So cheers, guys. I'm going to let me find where I was so I can pick up from where we left before Radek came on, and hopefully um, I can get through some of these. Where was I? Okay, here we are. SK9, do you think the job loss during COVID-19 will be great for the economy in example 5 years plus, since people have had time to reflect and pursuing jobs they are passionate about, which could boost economic productivity? Potentially, yeah. I mean, look, I think what you'll find in the shape of the Great Resignation is that there will be a lot of people starting their own businesses, and I think that could be good for the economy because it means that the even though it is kind of indirect, it's job creation, isn't it? Although people are being self employed. And if any of those businesses are potentially successful, the benefit actually goes beyond the 5 year mark because out of these startups will be companies that will be sold for a lot of money that might get acquired that could go on to do great things. So I think it could be a positive impact. I think I have been reading anyway that there are a lot of sectors at the moment that are offering more people money. They're offering higher wages to attract people back into the cycle. And for me, honestly, it's about time. You know, employers have had the lion's share of the power in the equation of recruitment and jobs and the job market for the longest time. Now it's gone the opposite way where they're trying to attract people back in and they're offering higher wages to attract people. So yeah, I think it will be beneficial in the long run. But I just think ultimately, in the meantime, there's likely and it's possibly going to be a little bit of pain as these businesses get off the ground. But having said that, though, I was having this conversation with somebody on Friday. There is so much money to be made just by having your own business and working in the digital space. Even if you are even on YouTube or providing some kind of digital service, you have a digital kind of like product base. There is so much opportunity out there, and I think because of technology and the way and where we're actually going to because of technology, the possibilities are limitless. You couldn't do this 20 years ago. There will be no way you could do this 20 years ago. There will be, if someone said to me that, 5 years ago, that I would have the ability to be on YouTube and off the back of that have opportunities come my way and start to build a business from creating videos in my office at home, I would have laughed you out of the room. I never would have thought that would have been possible, but it is. And I think we need to embrace the technology. We need to embrace where we are right now more than anything else. I think people who are resigning, trying to go after their dreams and their ambitions, I absolutely applaud you because there is nothing more empowering than being your own master, being the master of your own destiny. Don't get me wrong, it is not all hunky dory. It is it's scary, it's stressful, and you have to a certain extent, be a sucker for punishment. And you have to be really, really focused and determined, and you have to be willing to go on the journey of personal development because you're going to learn so much about yourself going at things alone. But if I look back over my journey over the last, this is 3 years on YouTube now, 3 years on the podcast. Um, I've learned so much. I've realized so much, and it's amazing that when you do what you're passionate about, what you really really care about, if you're doing it for the right reasons, the world has a way of kind of looking after you and making sure that you're going to be okay. And it might not be as quick as you think it would be or you'd like it to be. But I always say this to people, it's not about how quickly you get to your destination. It's the journey that you take on getting there, things that you learn on that journey to get in there. I did a tweet midweek and I was just encouraging people to basically like take a pause for a minute, appreciate where you are, then take a little look back and realize how far you've come. Then look forward and just know that you've got whatever comes next. Because sometimes we don't appreciate where we're at in life. We don't appreciate the things that we've done because it goes like that, right? You're one place 2 years ago, now you're here. And unless you take a minute to just pause, look back, and appreciate where you're at, you're never going to really be able to give yourself the pat on the back that you deserve in order to give you the confidence that is needed to press on forward. And I think that's really, really important. And I think ultimately we will see the benefit of it from an economic point of view. In more than 5 years' time, I guess it will be long lasting. Naeem, I hope you're well. Were you able to watch the 3.0 video for the Coinbase? Yes, I was, mate. Really, really interested. So I watched a few videos on Web 3.0 and read a few things on there. I think, look, it's got a lot of potential, but infancy, right? It's still in its infancy right now. There seems to be a lot of concern at the moment that there's a lot of VC money and venture capital and private equity money in Web3. And there's a little bit of fear there around the fact that because there's VC money and private equity money in there, that even though the premise and the purpose of Web3 is giving power back to the people so that you own the platform and the byproduct of your efforts on the Web3, that VC money will still be able to have some kind of commercial capitalist control over the concept itself. And it's an interesting conversation because I think in order for Web3 to get where it is, it needs cash injection. And unfortunately, because it's still being built within the realms of our financial system as it is, and in comparison to where we are going, it is still archaic in nature. These companies that are developing these things that are going to culminate into Web3 cannot go and raise money off private investors. They have to go to institutional experienced investors because the rules won't allow them to. So I think the application for it is absolutely huge. It's got a lot of potential and potential benefit. But I think there are still some really, really big hurdles to basically jump over in terms of, a lot of the time it's speed of execution of those transactions. Some of them will still have to use some of the infrastructure that is on Web 2 in order for it to, for it to be able to operate in the current phase as it is. That needs to be developed out. And that is going to take, obviously, capital. And the argument of that capitalist interest in something that is there to be liberating for the benefit of other people, well, you're still going to have that capitalist control. So there's still a long way to go, but the initial signs for it are actually really, really good. Walter, hey Pete, is there a way to get the January magazine if you signed up after it was initially issued? I missed it by a couple of days. Yeah, mate. If you're on Instagram, can you ping me a message on there and I'll get it sent out to you. If not, email me at pete@conversationofmoney.com and I will ping it out to you. I'll ping you the link. The first issue went out on the program that hosts it at the moment. It's going to go directly into my website. That's what I'm working on at the moment with my web developer at the minute. So the way you view it will be different. But yeah, ping me a message either on Instagram or drop me an email, pete@conversationofmoney.com, and I'll get it sent out to you. Right, let's have a look. Right, let's answer this one here. Good evening, Pete. Do you have to wait to the end of the tax year, April 5th, to open a new stocks and shares ISA? And if you do, can you continue to invest after April 6th if you have invested much? Okay, so until the end of the tax year, right? You don't necessarily have to wait. It depends on whether you've actually contributed to your ISAs within the tax year. So what I will do is I'll illustrate this for you guys so you can see what I'm about to say. So the tax year runs from, let's get this one right, April 6th, April 5th. And obviously this is on a loop, right? Because that could be 20, this will be 22. It ends in 23. And then that yearly date here will basically change each year as you move along the cycle. Now, potentially, so you don't have to wait until this day to open a stocks and shares ISA. You can open any time before the date. So let's just say you open the ISA today, and this is January, right? And let's just say that you invested 10K, which is half your ISA allowance, right? So come April the 5th, this is the deadline for you to contribute the full 20K. Come April the 6th, which is the start of the new tax year, you're going to get a new 20K allowance, but you can just contribute into this ISA that you opened here because it will just carry over, if that makes any sense. So in other words, you don't have to wait. Now, if you've paid money into the ISA and you've maxed out the ISA, then obviously you can't contribute any further beyond the actual ISA allowance itself. But come the new tax year, you get a reset for the £20,000, and you can just continue to contribute until the very next year when the tax year renews on April the 6th, 2023. I hope that answers the question. But yeah, you don't have to wait. I think you might have had a second part in there. Just be careful as well, guys, that you don't double dip into your ISAs. And I say this a lot to people that, some people will say, and I often have this, people will ask, well, I've got this ISA with, say, HSBC. Can I go and open another one with, I don't know, Hargreaves Lansdown? The answer is no. You can't have two stocks and shares ISAs in the same tax year. So if you did have an ISA with HSBC and you wanted to go and open another one over here with Hargreaves Lansdown, what people will generally try to do is close this and pay the money in here. Don't do that. What you want to do is you want to do a transfer from here to here. And what you would do is you would ask Hargreaves Lansdown to initiate this transfer from HSBC. So you can't have more than one stocks and shares ISA within a tax year. So you just need to be mindful. If you do want to hop providers, then you absolutely need to do a transfer, preferably, because if you close it, depending on what's in the ISA account, you might have issues putting the money back in. So yeah. Do you coach on how to form structure of company and how to go about forming a holding company? No, I don't, mate. You will need a business coach specifically for that. I mean, I know a little bit about it, but not enough to be able to coach you on it. You need a business coach. I do know a few, or at least I've come across a few in my time. But yeah, you would need a business coach for that, mate. Or if you're trying to structure companies, maybe an accountant would be able to help you as well. If you're trying to get holding companies, so business coach or an accountant. Good evening. I'm looking to open a stocks and shares ISA on Vanguard. Probably looking to invest £100 per month or £200 per month. What Vanguard fund would you advise? I can't advise you on a specific fund itself, but I would generally just ask you first and foremost to think globally. Vanguard's great because obviously it's low cost. But obviously we've spoken a lot about inflation and markets being volatile and people being a little bit concerned that we're approaching a market crash right now. Um, if you go for a global kind of like index fund or an ETF or global option, you're going to be in a position where you're going to lower your risk as much as possible. It doesn't mean that you're going to be infallible to market fluctuations, and it doesn't mean that you're not going to potentially see your capital dip because you're still going to carry that investment risk. But by investing on a global basis, it should mean that you see less volatility. So maybe have a look at one of their global options, their global funds, but please make sure that you do a little bit of research so you understand what it's aiming to do and where it's invested, what sectors, what countries, and make sure that you're generally happy with the choice that you make. Really, really important. But if you're looking to invest on a monthly basis, you're going to get the benefit of pound cost averaging. Just know, though, it will probably be a really, really bumpy ride because of where we are right now with the market. So, yeah. There's a follow up here about that ISA. Can you open an account with eToro, Trading 212, and Vanguard all at once from April the 6th? I mean, you can open the account, but you should not pay into more than one of them. So you cannot pay in. Well, first and foremost, eToro doesn't have a stocks and shares ISA, so you can't have an ISA with them. You can have an ISA with Trading 212 and Vanguard, but like I said, you cannot pay money into a Trading 212 stocks and shares ISA and a Vanguard stocks and shares ISA. You have to choose one provider to use. You can't have both. Good question. What do I do when my stocks go down drastically? Well, first and foremost, I'll probably look at them and just think, oh my God. But generally, I don't do anything. Look, market volatility and markets falling is part of the game. You're going to have good periods, you're going to have bad periods. Unfortunately, you can't control when those things are going to happen. Now, the way I invest, I'm not invested in a ton of individual stocks like most people have been encouraged to do here on YouTube. And again, this is where I say this with the greatest of intent, but there are way too many people here on YouTube who have no idea what they're talking about. They've never worked in financial services. I mean, Rallick, he has exams under his belt. So he has his investment management certificate, right? He has exams under his belt. So he's a popular investor on eToro. He didn't just end up being a popular investor on eToro because he's some dude who just knows a little bit about trading. He actually has qualifications behind him. And unfortunately, there have been way too many accounts on YouTube that have been talking about buy this stock, buy that stock. This is going to 10x, this is going to 5x. And then in the same breath, telling you the world is going to end, sell everything. It's a really, really dangerous space. I don't invest like that. I've never, ever, ever invested like that. I've always taken a pragmatic approach. So I use a core satellite approach. Most of my money is in index funds and ETFs because that gives me the largest chance for diversification in terms of my risk, and it gives me exposure or the ability to invest in as many companies across as many sectors. That lowers my risk. I haven't got a shed load of money just in individual stocks that I'm hoping are going to do well. I do have individual stocks, but most of my money is in index funds and ETFs. That is a logical, thought through process for me because I've been in the industry for quite some time. I'm qualified as a financial advisor, so I take what I know and I apply that into my own personal strategy. So when my stocks go down, I generally look at it and feel, okay, it's down, but I know it's part of being invested in the market. Markets are cyclical. You're going to have high points, you're going to have low points. You can't control when they're going to happen, but they will happen. It's guaranteed. And so for me personally, having an emergency fund, that's really, really important. I have an emergency fund, I've got money set aside. I haven't got all of my money in risky assets that could potentially just fall overnight and wipe me out financially. So I do nothing. I sit tight with it. I look at it and think, okay, cool, it's fine. Sometimes I might say to myself, actually, you know what? I'm going to take some money off the table if I've done really, really well. Or I feel as though actually I'm not too confident or comfortable with the performance of something that I've been invested in. I might say, you know what? I'm going to disinvest it, put it in cash and hold it there. Those are all still viable options that you do. But personally, I generally don't panic. I just leave the money as it is. It's invested. It swings and roundabouts. And I would encourage anyone who is currently looking at the markets, panicking, really, really worried, to just kind of take a moment, just breathe. Hopefully, you've got everything right in terms of the plan. You know why you're doing this. You haven't put all of your money in. Oh God, right. I need to change over my battery. Bear me 1 second, guys. You haven't put all of your money into risky assets. You've kind of diversified and you've taken a pragmatic approach. Hopefully, that's what most people have done. I think if you follow me or here on YouTube, most of you will have done that. You would have taken a pragmatic approach. But if you haven't, maybe this is the time to really, really start and ensure that from an investing point moving forward, you're going to be best positioned. There we go. We're back. You're going to be best positioned so that when this kind of stuff happens again, and it will, you're not going to be, panicking too much. All right. Kev. Oh yeah, here we go. Kev. Wish I'd listened to you about ETFs and only invest in 2 to 3 stocks you like rather than listen to YouTube moon boys. Look, I can't say this enough. We need to be very, very careful. And hindsight is a great thing. But you think about the guys who have been talking about, this stock going 100, this stock doing, 10x. What are they talking about now? Seriously, what are they talking about now? The guys who were pumping Nicolau, right? What are they saying now? It's really, really important. I'm not saying just listen to me because I have qualifications and I have experience in my field. I'm not saying that at all. What I'm saying is, you as a retail investor, it is your responsibility to ensure that you are listening to a variety of arguments for how you should invest and interpret and take those arguments and form your own opinion. I feel like the party pooper. I've said this a number of times. I always talk about being safe and, you know, and doing things pragmatically and being mindful and being considerate and just being strategic in your approach. I know that that is boring. I know it is. I realize that it's boring. The reality is that if I were to take the stance of talking about this stock will 100x, this stocks will 10x, and Palantir is going to blow up, and Tesla just did something to change the world. Their share price is going to rocket. I would be getting thousands more views than I currently get. But that's not what I'm here to do. I'm not here to feed into the hyperbolic nonsense that a lot of people are hyping here on YouTube. I'm here to kind of share my knowledge, my experience, to try and give people both sides of the coin. That's what it's all about. My biggest fear is people who have just started in to invest, who have never been in this scenario, will get burnt really badly, and then that puts them off investing for life. Like, this should be like a joyous thing. Like, you're investing in the market, you have the ability to invest in the market with £1 if you can. Do you know how much I wish I had the ability to invest a quid or 10 quid, 20 quid every single month when I was 25 years old? It would have been life changing for me. Now we have all of this technology. We have the ability to invest small amounts of money to participate in wealth generation. Something that you needed to have 5, 10,000, 15,000 pounds to do when I was 24, 25. You can do this with as little money as possible. This is like a joyous thing, right? You should take pride in that and just know that actually, you know what? This is going to be something that I'm going to do consistently for a number of years. And it's going to change my life in 20, 30 years' time because I'm going to have options. That's what money is there to provide you, options. When you get to 40, when you get to 50, and you're in your 20s now, you have, a good amount of money sat in an investment account, and you think, okay, what do I want to do? Do I want to carry on working, or do I want to, semi-retire? What do I want to do? You have choice. That's the whole point of this. I get excited talking about the prospects and and what you can achieve when you look at investing. But like I've said in the analogy that I've shared a couple of times in this already, is there are too many people selling people shovels. There are too many shovel merchants out here on YouTube talking about you can 10x this and you can be a millionaire overnight. They're selling you shovels. And guess what? They're making a mint doing it as well. These guys will have courses where they're charging people £2,000, £3,000 for a course. It's absolutely nuts. It's crazy. And I'm not saying don't invest in yourself, obviously. But do you know the amount of times that I've got stick on my channel for having a $59.99 investment course for beginners? Because I'm not telling you that you're going to end up with 10K after taking my course. No, you're going to learn the basics, basically. You're going to understand investor psychology, the importance of having a goal, how asset allocation works, what you should consider when you're buying index funds versus individual stocks, how to actually get started, timeline theory, all of that stuff. That's the basic fundamental foundations that you need. I sell that $59.99 with no hyperbole, and people give me hassle for it. I don't understand the world. If I'm not literally selling you shovels, it feels like you're doing something wrong. Hey, but lucky I'm not here for money. Lucky I'm not here purely to make money. I actually want to help people, and that's the most important thing. So, mate, Kev, hindsight is beautiful, mate. And you know what? Lessons, these things make us stronger. These things help us know what it is that we need to do and how to better ourselves when the next iteration of these kind of events come along. You know, it is a long-term game, and it is all about just trying to make sure that we do the simple things often, and we can do that continuously. Because just like investing, it is a compounding effect. And the effect, when you finally get to the point of fruition, where it's actually worked, you can see the benefit of it, it makes you feel so much better about yourself and the journey that you've been on. And it's the journey. You learn things. It's personal development. That's what it's all about. I'm conscious of time. Let me take one more. I'm going to take this as my last question. Apologies if I haven't got round to your questions. PM, I know that you just did a super chat there. Thank you so much. It is really, really appreciated. Ralik, I also know that you gave a super chat as well. Thanks for supporting the channel too, bud. Pete, what's the best advice you could give an 18-year-old who is looking into investing to set himself up for the future? Mate, listen, whatever you earn, and if you could just do this for me, right? I don't care if you earn 500 quid a month or 200 quid a month or £1,000 a month. And I know that 18-year-olds earn serious buck these days, right? Take 10% of what you've got and literally just invest it. Minimum 10%. Just invest it. But more importantly, don't get too hung up with some of the superficial stuff, right? Don't get caught up with you need to drive a nice car, you need to be wearing Balenciagas, you've got to have the Louis Vuitton. Don't worry about any of that stuff. That stuff will take care of itself. Okay, in the scheme of things, it's completely and utterly inconsequential. It means nothing, right? But if you can just be really, really mindful of, you earn good money, you try to retain as much of that money as much as you possibly can and invest wisely, you're going to be completely and utterly set, mate. Small habits that compound over time. You're 18 at the moment, mate. You'll get to my age, I'm 42. If you just do these things consistently, trust me, you're going to have choices. You're going to be able to decide on whether you have, property portfolios or whether you want to semi-retire. You'll have choice because you would have built up an asset base that will give you the ability to decide what you want to do, how you want to live your life, the kind of things that you do on a day-to-day basis. So, please, mate, just don't listen to the hype on social media. And it may be a little bit hard at this point in time, but you guys are incredibly mature. You're way more mature than I was at 18 years old. You guys are thinking. You're very, very bright. Think about the things that are going to give you fulfillment more than anything else. And a lot of the time, that isn't the car that you drive. It is not the superficial stuff. It isn't any of that. It's just understanding you and understanding yourself. If you enjoy traveling, spend your time doing that. If you enjoy specific things, you have specific hobbies, spend your time pursuing those things, and that will give you a sense of fulfillment. If you can get a sense of fulfillment alongside all of this stuff around managing your finance and investing and making sure that you're not, being distracted from that, the core things that give you fulfillment, you're going to be absolutely fine. Anyway, I'm going to get off my soapbox. I could talk about this all day. But guys, thank you so much for watching. I'm just going to scan these very quickly. There are so many comments on here that I've not got to. We will do more next week, I promise you. I'm actually thinking of actually doing something, I don't know, maybe on a weekend during earlier, because I know that we're now approaching 10:30. I've still got some work to do, so I've got another 2-3 hours work to do this evening. But maybe do something a little bit sooner, so that we can spend more time, and I can get people like Ralik on, and maybe get some other people on that I know actually know their stuff. So we can have an extended conversation about this kind of stuff. I'm actually thinking of opening up another Discord group where basically you can just come in and we can have a community where we talk about things. You can ask questions in there. The only reason why I've not done it so far is because it's the time allocation of what I need to put in to make it worthwhile you guys. The last time I did it, there was a fee attached to it. This time, if I make it free, hopefully what I would like to do is to have you guys in the group, you guys communicating, you guys exchanging experiences, asking each other questions, and I can come in and answer questions maybe once a week or so. I'll think about actually getting that together over the next week, because I think we've now built quite a big community here that we can start to really kind of communicate together and actually do a little bit more work together and just answer some questions in a way that will be beneficial to everybody. Someone just asked where they can find the course, conversationofmoney.com. It's there in the tab. There's a courses tab. You can access it there. You can finish it in 90 minutes. It's got tests in there. You get lifetime access. I'm actually due to update it as well. So you get updates to future updates on the course as well. Carly, thank you for that super chat as well. You're always around. You're always, always, always around you. And I do appreciate you. So thank you so much. Have an amazing evening. I've got 3 hours worth of work still to do. Enjoy whatever it is that you want to be doing. And I will catch you on Tuesday for another video. Take care.